Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or alternatively not lose all of your money on the internet with us. Loaded up for discussion today, we have the market crash continuing. Bitcoin hit as low as 78 before bouncing to 81. 1.75 trillion was wiped from the stock market. Next, we've got strategy. Michael Saylor's strategy seeking to raise up to $21 billion via perpetual preferred stock to buy Bitcoin. Legendary will be breaking that down a little bit later. And we've got Trump plans to sign executive order ending Biden era crypto debanking. So lots going on the regulation front still, but the price keeps going down. We'll talk about that all a bit more as we go through the show. Today, I've got Legendary and Rahim with me in the co-host seats. We're ready to get into it. But just a reminder, friends, nothing that we say on this show is financial advice. This market is incredibly risky, as we are witnessing right here, right now. So do exercise your own caution, use your own judgment, and hope things go okay as a consequence of that. With that out of the way, Rahim, it's Tuesday. It's the 11th of March. How are you doing? How are you feeling?
GM, everybody. So far, so good. It's been a good, slow day. Obviously, the markets have been a bit crazy, but it's been an interesting time. I've been like reflecting a lot on like a way more philosophical way, I guess. Like not even just like crash related. Like I was just thinking
Everyone
yesterday
becomes a
when I was like,
philosopher when the markets go down, right?
yeah, and I think it's kind of interesting. I was just like thinking about like just like the political landscape. I was thinking about like what would like Satoshi say with like everything happening with the government and stuff, right? Like one minute we are like celebrating it, and then the other minute you look at like in some ways we've become way more centralized. Yeah, it's just like fascinating. I know I guess like it's a time where everyone starts reflecting on this, but it's like in some ways I feel like the older I grow up and the more deep I get into crypto, the more I start seeing uh, the flip side of it from the traditional financial markets, and then you come to realize that how much is this actually different? How much of this will eventually maybe like decouple from each other? So, anyways, but it's great conversations to have within my own head, I guess. But it's been good otherwise. Excited for the show today and dive deep into some of the darker parts of crypto happening at the moment.
I like it. Yeah, I thought you were going down some. Yeah, the what would Satoshi say is like a interesting philosophical road to go down. I've articulated a thing a while ago, and actually, it's a tweet that I've included for one of the write-ups or segments later on. Something fell off, right? Something even fell off as all of those pieces of news were coming through, with everything that's going on with World Liberty Fire, with all of the tweets from Eric Trump, with like this co-opting of the Bitcoin vision and message, which arguably, look, that's what people wanted. People wanted
Mm,
the people to buy their bags. Like people wanted that to be the end game, and that's what they're getting. But as is always the case, sometimes you wish for something and then the reality is not necessarily exactly how you had envisioned it initially. And I
mm,
think what we're getting is just a little bit of that reality dose as we go through this on the pure crypto side. And then obviously all this macro stuff is happening at the same time, which is kind of separate to crypto, but is obviously being
mm.
deeply affected by it. So um, yeah, we'll be thinking on all of those things more. Did you have anything else on that, Ryan?
No, I think it's just like I think just the point where you were talking about it fell off. Like it's crazy to think that happened so quick. Like Eric
Yeah.
Trump was just like tweeting about like buying ETH and everything just like a few weeks ago. Liberty Finance was buying like 2-3 weeks ago. So I feel like the timing of it, I think you're spot on, has been like rather jarring. But it is what it is. I see where we go with this.
Yeah, good point. That fall off is rapid, and to be fair, this is a point we're going to be making throughout the show as well. Looking at stocks right now, Tesla is down 50% from the post-election high. The election only happened a couple of months ago. So that run up was aggressive and that fall off was aggressive too. And we can debate where things are going to be moving, and we'll talk about some of those ideas in today's show. But man, trying to time these things perfectly is,
Mm,
I think, if it wasn't obvious already, that's one of the key learnings, is that it's almost impossible to time it. one thing that we were speaking about through the months of the mania was just like routinely taking profits, selling on the way up, not really caring if you're up 3x or 4x or 10x or 12x. Like these things, you bank them because you're just not going to be able to time that top with a vicious sell-off that it was in the end, I think. Legendary, what are you thinking? Anything to add on that specifically? Anything else going on that you want to get in?
GM doing quite well. Love Rahim's good energy. And I'm looking for some bullish energy in the YouTube comments, and there is none. I see.
YouTube comments is dead right now.
Yes,
Go on,
yes.
Funky. Go on, Cryptomocus.
Cryptomocus needs hopium in his veins. Stefano is down bad and is trying to bring the hopium back by typing in all caps. It's not looking good.
Yeah. The people are requiring some energy. We're trying to bring it in our words today. Don't know what the market will do as a consequence. But look, maybe we're always looking for indicators. We say media is a great indicator. We know when things are about to go up because we can feel the energy. We know when things are going to go down because we can feel the mania or the nonsense happening. This is bottoming out energy, I suspect. Bottoming out energy. Although, as Crypto Mocha says, perma bull on the asset class in general. But look, let's get into it, guys, because there's a lot of information that hopefully can be helpful in informing our decisions over the next few days and weeks. Let's get into it as usual. Starting with the price action, we've got Bitcoin, which is now how much down? It's not even down that much, guys. What's the issue? Bitcoin's down 1% to 81.5. Yes, it did dip to around 78 before it bounced back. It's only down 3% on the week. Not that bad. ETH, however, is down 9% to 1.9K. Broke through 2K yesterday. Not ideal. XRP is down a couple of percent to $2.14. Solana's down a few percent as well to 123. BNB is at 550. Cardano is down not that bad, all things considered. It ran up to like $1, didn't it? Now it's at 72. Getting into the meme coin side of things, I suspect it's going to be carnage. Doge is down 7% to 16. Pepe's down 7. Trump's down 7. Bonk's down 6. It's another red day, guys. Pengu's down a couple. SPX, Murad's coin's down 27 in a day. That's not very nice. Fartcoin is flat. Looking at some others, if there's any respite for anyone, AI16Z is down 10 as well. So the AI side is down 2. Mog is down 9. Okay. Things are very red, guys. That's what I have to say on the meme coin side of things. AI XBT down to 10 cents, down 8%. Fascinating. Okay. Getting into the main headlines, since the meme coin side is pretty cooked. The market has continued to crash, as we said. Bitcoin hit 78, 1.75 trillion wiped from the stock market. I'm going to be breaking that down a little bit, showing some key thoughts on where we think that might be going and some opinions that have been shared. Strategy, despite all of the carnage, Michael Saylor's MicroStrategy it will seek to raise up to $21 billion perpetual preferred stock to buy Bitcoin. Legendary will be breaking that down in a bit more detail today. That is significant. And then continuing with the trend of positive regulatory updates, Trump plans to sign the executive order ending Biden-era crypto debanking. Rahim will be breaking that down towards the end of the show today. Legendary. First, so a couple of notable sales, a couple of Fidenzas sold in the 25-ish region. That's always good to see. Digital art still selling nicely. Anything else notable on the NFT side?
Honestly, very brutal day for NFTs as well. We have Pudgy Penguins sliding under that 9 ETH floor, sitting at 8.6. We have Bored Apes losing the 13 ETH floor, significantly being down to 12.37 ETH. Rest of the market is really just following that for the NFTs. Once again, CryptoPunks are holding up very, very well, at least in ETH terms. They are still at 38.4 ETH. However, the USDC side of that, price tags starts to look more and more attractive by the day. We're down to 72K. And I said, like, when ETH goes to 1.8K, and we went there, I want to buy a punk, but I feel like we might go lower. So I'm still patiently waiting on that.
That's what they always say. Just want a little extra slice lower, but it's not going to come. Yeah, good. Well, I'm keeping my eye out as well. The one that I wanted was listed and then it was taken down, but it was more than 50 ETH. So I don't know if I could get them lower on that. Into the Web3 roundup to get you up to speed with everything else happening. Coinbase announced they'd be launching 24/7 Bitcoin and ETH futures. Off-Chain Labs research team behind Arbitrum announces ARB strategic buyback program. More strategic reserves being created for revenue generating protocols. Singapore Exchange to roll out open-ended Bitcoin futures listing. Bloomberg reported the BBVA, the second largest Spanish bank, becomes the first bank in Spain to get regulatory approval to offer Bitcoin and ETH to in-app clients. So all kinds of institutional, corporate, good news happening across the board for people to get better access to this asset class. Movement mainnet went live yesterday, and Move's also secured an ETF. So big news for Move. We had Rushi on the show a couple of weeks ago to chat all things Movement Labs. That was pretty interesting. And then a couple of other bits. Sam Spratt announced the finalists for the Masquerade. This is his very significant latest piece of art, which has been very, very highly anticipated. And then finally, Jupiter DAO votes to not give founder Meow any dupe until 2030. His allocation is going to go to new team members and expansions. I forgot to mention this on the show yesterday, but there's been this big controversy in some ways about the Jupiter team compensation. It's a colossal amount. It's an absolutely huge amount that they're getting paid. Lots of people actually sticking up for them in a way to say, look, this is the top talent. This is one of the biggest protocols in crypto. You want to attract the best people, you have to pay the best. And actually an additional criticism, which is actually not of the team, but of the process, where I think a lot of founders, and I would actually agree with this myself, DAOs should not be involved in deciding who gets paid what. Like, if I'm the founder of something, I need to have the agency to decide and make that decision and not get thousands of people to agree with me in order so I can execute on my vision. So I think that was the two lines of criticism that might have existed in the last few days. That's the Web3 roundup. Before we get into the main headlines, which we are pretty significant today, anything catching your attention legendary, then Rahim?
Yeah, I like that we're moving more towards making everything available to trade 24/7. It's not only Coinbase pushing for 24/7 BTC and ETH futures. Also, the Nasdaq has suggested that, or is thinking to move into that direction. And I am honestly surprised by that, because like I always said that, beautiful thing about crypto, as we all know, is you can trade at any time. I was like hoping that stock markets will pick up to that. And I used to be way more optimistic on that. But then I kind of realized that, or like reminded myself is probably the better wording, that stock markets have been around for centuries and crypto is just a thing of basically the last decade. So them adapting and changing that so fast is not something I would have expected. But again, seeing the push coming from the Nasdaq, seeing the future set for Coinbase is actually something I really like. Now, the more cynical take that someone shared on the timeline in this market would be that now you can also lose money on the weekends. But again, I like the 24/7 availability for trading.
Yeah, that is a cynical take. I like the cynical take because I think one of the things is actually a future that I would ideally avoid, but maybe one which we are rolling towards as some type of dystopian future, is if you believe that lots of things are going to get tokenized, which maybe people will actually stop doing now after they've realized that no, this is not the internet capital markets. You can't just tokenize something and the thing go up in value and stay really valuable for a long time. But if lots more things become tokenized, everyone ends up needing to trade everything all the time. And this is actually a bear case for Web3 gaming that I've been thinking about, which is something like the whole point of games, I think, or at least one of the points of games, is to escape your universe, like to escape the world that you're in order to play this thing that takes you to some other universe, and you can explore and play and win and whatever. When those assets become real, which you own and you can take in and out of the game, and you can buy and sell for value and get loans against, and suddenly your livelihood is attached to it, it's not really a game anymore. That's just your life. And although it's that's a fun innovation, it becomes your job. It becomes a job, and those assets have real value, and it's not so fun to have someone come and steal your wood or your axe in a game if that's like real money. So yeah, I think we could be hurtling towards that kind of dystopian environment where all of these assets are tradable all the time and you've just got to be online all the time and have to trade all the time. But then obviously there'll be people who just want to opt out of that because that's not what they actually want. Any reflections there, Ledge? So you're laughing at something, whether it's me or someone in the comments.
No, it's you, or it's what you said that made me laugh. In thinking about this dystopian future, you know, I've always had like this dream of one day living in a VR capsule, being fully immersed in an MMO, just living in the fantasy world, escaping everything, as you just painted that picture. And then I just pictured myself, you know, doing that, and then I save maybe 2 or 3 years of playing, worth of resources, worth of gold, whatever it is, to build my own castle, because everything is attached to ETH, and ETH crashed 10% on the day. I still can't build the damn castle to myself. So you're making a very, very accurate point with that.
You had a whole time dilation happen in your head, like you planned like a castle, like you saw everything.
I was in
white
2030 already.
I love that.
What about you, Rahim? What's catching your attention at the moment? Anything in the Web3 roundup before we get into the main headlines today? Anything catching your attention? Anything going on that you're finding interesting?
I actually think like NFTs have been doing a lot better than everyone is giving them credit. Personally,
I was actually thinking that earlier. I was thinking that
I feel like
earlier
no
as well.
one's talking about it on the timeline. You look at those Fidenza sales that you mentioned. Punks are obviously doing great. Even when we're talking about like you know, when Legendary was talking about the price action on Pudgies or Bored Apes, they're down like an ETH, which so in ETH terms, like they're not as bad. And it's nice to see in like such a volatile environment that at least on the native currency level that they aren't as volatile, that people are actually holding to their penguins, to their punks, to their artworks and stuff. And I think that's kind of like how collectibles should work. So I actually am like pretty impressed, and I'm happy to see that people are not like paper handing their NFTs if they've actually bought it with like some conviction, you know?
Yeah, it reminds me again of, we spoke in depth yesterday on the Punk 6529 thread, which he shared yesterday, which was basically articulating the point that Bitcoin is incredibly hard to sell because it elicits this feeling that you're not supposed to sell it. ETH, for him at least, and I think this probably resonates with more people, it's there to buy things. Like, it doesn't feel that bad to sell. It's there to conduct economic activity with. But then suddenly with NFTs, you actually have this asset which arguably feels even worse to sell the things than Bitcoin. Well, that was his point. Maybe other people are slightly different on the spectrum, but it elicits a connection with you via the art or the community or whatever, which means that it's actually harder to sell than those other assets. And maybe that speaks to maybe a little bit of what's happening, where they're so established now and these communities are so established on the community side, and then the art side, maybe that's been sufficiently established too, that they can operate as a pretty hard asset on some way. So I was actually thinking that exact same thing. I'm glad you brought that up, because all things considered, when Tesla's down 50% from the highs, it's not that bad that Fidenza is still trading at 25 and punks are just rock solid at like 38 ETH. And yes, the dollar price is down. I appreciate that. But in terms of ETH,
like at one point, these were like your risk assets. They aren't behaving as risk assets within our niche ecosystem. You look at memes crash like 20-30% like anything. So I think it's fantastic to see that with NFTs.
And I think maybe that's the right comparison, right? Because, you know, comparing, well, I don't know that you can compare it on different levels, but everyone said meme coins were this cycle's NFTs. And on some level, that has played out because you had the huge thing up and now you had the huge thing down. But the best NFTs of last cycle have clearly transcended into this different realm where they're actually holding up pretty fantastically, I think, all things considered. Good thoughts, good discussion. We're going to get into the bigger stuff as well today. In a moment, we've got the headlines on Bitcoin and the stock market coming. We've got more on strategy and what they're doing with more raising to buy more Bitcoin, and then some more regulation stuff on Trump and executive orders on making sure the debanking stops. But just before we get there, we're going to get into our Polkadot explorations segment today. Legendary, take it away.
Let's do it. Let's talk about stablecoins. They've seen a massive growth on Polkadot. Transactions are cheap and fast, and there's lots of opportunities to earn yield. So let's break that down. There's a total of $112 million worth of USDC and USDT on Polkadot's asset hub. That number is up almost 4x from March last year. And there's many reasons to use stablecoins on Polkadot. First of all, Polkadot's multi-chain architecture allows more than 50 layer 1 parachains to seamlessly integrate stablecoins via the asset hub. And it's this design that's boosting liquidity and also makes cross-chain transactions both cheap and fast. On the cost side, sending stablecoins on Polkadot costs half a cent. That is even cheaper than on Solana. Just to put it in perspective with ETH, even though we are at less than a GUI for gas costs 0.6 GUI, same transaction would cost 18 cents on mainnet at the current gas fees. And what's actually even cooler is that you can bring your own gas. That means you can use stablecoin to pay the transaction fees. You don't need the native asset in your wallet like ETH for Ethereum to perform a transaction. So with all those features, what can you do for yield with stablecoins at the moment? We did touch on protocols like Moonwell and Hydration in previous Polkadot explorations. So just a quick refresher on that. Moonwell, on the one hand, is a lending and borrowing protocol. It's built on Moonbeam and Moonriver parachains. Currently supplying USDT on Moonbeam lets you earn around 4.7% APY. And on the borrow side of things, you have Hydration offering stablecoin loans at a competitive 3.4% borrow rate, which is a highly affordable option. I do think that, especially in times of like high volatility like we're seeing right now, it is worth your time to think through your personal stablecoin strategy and allocation.
I like it. I couldn't agree more. I think I saw actually some really prominent traders yesterday asking for advice, like, what do we do with our stables at the moment? What's the best place to park them? So when the market's going crazy like this, I think people want to have a way to just keep earning. So appreciate that update, Legendary. Good Polkadot exploration. Let's keep it moving, getting into today's.
Give me 1 second to quickly hear from Funky on that, because he is our expert when it comes to all things Polkadot as well. Funky, welcome to the stage.
GM gang, just real quick. Yes, if you have Tether and USDC on Hydration, you can earn like 23% because they incentivize the pools. So it's a good place where you're really not going to experience any kind of stability because you can just provide both sides of it and then earn the trading fees. And then you get the incentivization on top of that. So you could use that to then either buy more stables, stack BTC, whatever. But yeah, 23% on Hydration right now.
Like it. Extra little juice there. We like the extra stuff. Appreciate that, Funky. As I said, getting into the main headline for today, obviously this is the news that the market is down. Bitcoin hit 78K overnight. 1.75 trillion was wiped from the stock market. Bitcoin did bounce back to 81K after, which is where it's at now. We articulated the variety of reasons why we thought this was in the process of happening yesterday. I think those things are all the same. Not going to go into them in huge detail. We did talk about tariffs continuously being a thorn in everyone's side, with the states kind of threatening those across the board. Ukraine war is obviously unresolved at the moment, and I think that's creating a lot of uncertainty. And then you have these spending cuts and austerity, which are being threatened in the US via Doge, as they are trying to kind of curb spending. I had this tweet to share, which is, I think one of the things that's happened as part of this market is that it's just become the president's market, or that's what I'm calling it. I had this tweet from March the 3rd so that was like more than, I don't know, 10 days ago or something. I said, crypto is up on the strategic reserve news. This was when Bitcoin was at 91. I said, can't help but feel the vibes were off though. Cardano was leading the majors up 50% after that tweet, right? And I said, if the market is made by presidential tweets, then the market will be taken by presidential tweets. And I think, although I was talking about tweets in that context, I think what has happened over the last week or so is presidential statements, or statements from the Treasury Secretary, have kind of articulated to the market that they are absolutely not playing around with this. They are going to communicate that we're going to be in for a period of pain. How long and hard that pain is kind of to be decided. But we spoke yesterday about how the Treasury Secretary and the President were preparing us for lower. They said They said they're not even looking at the stock market, which we don't believe to be true. But that was their position. Again, trying to communicate that that is not their foremost priority at this moment in time. So I guess the question becomes then, well, how low do we go? Where do we see this bottoming out? And none of us know that for sure, but I just wanted to share one tweet from Arthur Hayes, former prominent founder, big investor in the space now. This was what he shared as his thoughts, and then I'd be curious to hear your guys' thoughts. He said the plan is to be patient. Bitcoin likely bottoms around $70,000. In his opinion, that would be a 36% correction from 110K at all-time high, which is very normal for a bull market. Then we need stocks to enter free fall. Then we need TradFi Muppet to go under. I'm not sure what he means by that. Then we get the Fed, ECB, BOJ, all easing to make their country great again. Then you load up the truck. So this is him trying to articulate the kind of dominoes that he thinks needs to happen in order for the market to come back in a more risk-on way. One thing I just wanted to point out, which I think maybe is lost on people because meme coins specifically are down so aggressive, is this interesting tweet by Greeny. Where is it? Have I lost it? I don't know. Oh, you've got it there. So this shares what you can see on the screen for the people who are listening in. Is the point is made that this has been the least volatile cycle so far. And what the graph is showing is that the drawdowns in all of the previous cycles have been far more significant. And I guess as the market cap of the digital asset class increases significantly, it takes even more money for it to become more volatile. And Saylor talks about this all the time too, where over time, the volatility will go down. That does appear to be what we are experiencing, at least so far, so long as we don't go much further down. But I think what that graph shows, or provides some color to, is you would maybe expect there to be less volatility moving forward, which would also mean that maybe you don't necessarily have to go much further lower than here or 10K down from here, because volatility over the long period of time should be decreasing as the asset class matures and becomes more solid. So those are my thoughts. That's the kind of general set of thinking that I'm kind of going by at the moment. Legendary, coming to you first. What are you thinking here? Anything catching your attention in particular? Where do you think we're going? And then Rahim.
Yeah, I think the chart by Greeny is very helpful, just to remind ourselves of how much more volatility there used to be. And that obviously, if you look at BTC, we've seen way, way bigger drawdowns than that. The question really becomes, where in the cycle are we? If we still think that cycles exist, if we are, that is a point that Beanie was making. If we are more towards the end of a cycle, then seeing a 60% move off the top wouldn't be too unreasonable. That's something we've seen in previous cycle, kind of echoing exactly what Greeny has shown on that chart. That would mean, in Beanie's point, that we move more towards 40K. If Arthur Hayes' perspective more plays out, which is more of a mid-cycle perspective, yes, we need to flush out stocks as well. We need to have so much pressure on the market that the Fed will go down with interest rates. The one thing to keep in mind, though, with that is that inflation is still high, with, 4.5%-ish. And then you have this easing going on, and then stocks are coming back, and you're more in a mid-cycle movement, and you could see BTC moving back to 100K pretty quickly. I think it's super hard to say what is happening right now, because economics is way more complex than that. There's very, very strong global implications of that as well. There's like factors that did not exist in previous cycles. We now have the institutional buying side of things. We have ETFs. We have Michael Saylor going absolutely crazy with strategy, which we are going to cover in a couple of minutes as well. So like putting that picture together just has more than one or two factors. And I feel like we often break it down, or people try to break it down and look at like 2 or 3 things that are going on and say, this is what happened. Those like 3 indicators that I look at, and because they have been moving this way, I think that's going to happen. But again, we still have the war in Ukraine going as well. We have potential escalations coming there. We have massive defense spending from coming out of Europe. We have the US potentially threatening to leave the NATO. So like there's so many more things that would cause like fear and uncertainty that I think all of those events would single-handedly be strong enough to send crypto down even lower for a brief period of time, that I have a very hard time with people, no matter how experienced they are, no matter how much success they've had previously, who are saying we're going to bottom at 70K, we're going to 40K, and this and that is going to happen, because we have so much more geopolitical uncertainty as well, that the only thing I'm like comfortable to say is that I'm comfy in stables, and I'm confident that in the long term we're going to go up with BTC. But for the short term, the honest thing is I have no idea where we're going.
Yeah, I think that's fair. I think a lot of people have expressed genuine uncertainty at this point, because the reason why it's uncertain is because you can't predict Trump. I think that's like anyone saying that they can predict, like if we're in this kind of market where we're so reactive to whatever they decide on tariffs 1 week, on the war another week, it's impossible to predict that. And therefore it's just very, very challenging, I think. One other thing I wanted to share before we go to Rahim, and then Funky, I see you with your hand raised as well, coming right to you, is just I guess the broader context. We haven't shared the screen. We mentioned it earlier. Landry, if I can share my one, please. I want to share the, oh, it's still not working. This
should work now.
There we go. Yep. So I've just got the Tesla chart up. It's a pretty crazy chart. Like it's given up all of the gains from the post-election period. In November of 2024, it was at $213, went up as high as almost hit 500. And now it's back down to 222. Like crazy ride for that. And I guess it just puts it into context that yes, we think we are in a volatile market, which we are, but actually at the moment, like it's kind of completely all encompassing. This volatility is all encompassing. There's nowhere to hide. So, yeah, just that for additional context. Rahim, any thoughts here? Then we go to Funky.
I mean, the two of you have put it like very eloquently. I've been really following Arthur Hayes this cycle because I think he's done like a very good job calling some of the integral moments in this space. What just like is interesting to me, like, you know, when we talk about like 30% drop down in bull markets is normal, like it's crazy to me that, like, you know, other majors which have like positive news, right? You take ETH, you take Solana, they have like ETFs now, you have a World Liberty Finance buying it, yada yada yada. These coins are down like way more. Solana was 290 like a couple of weeks ago. So I feel like when we are talking about like the 30% drawdown, we are talking about something like Bitcoin. But like I think one of the things I would have liked to assume that at least stuff like ETH, or maybe like at least Solana, we wouldn't be as volatile. However, they've shown like good 50 to 60% drawdown. And then going back to what, you know, you were talking about Tesla, where either this is an inflection point where like, okay, maybe crypto markets aren't doing bad if you think about Tesla is down almost like 50%, or there's so much more blood to come that like we're going to see probably in the next few weeks.
I like you kind of brought ETH and Sol into it. Biggest learning for me this cycle as a person that held way too much ETH for way too long. This tech is vulnerable. Like tech is vulnerable. I still feel personally ETH aligned. Like I love the vision. I love the things it stands for. I love all of the things which it seeks to do, and that vision for a decentralized blockchain. But man, this tech is vulnerable. Solana is going to feel it too. Tech is vulnerable. Bitcoin is separate, very, very separate. Appreciate the takes. Funky, welcome to the stage, my friend. Again, what are your thoughts as on the markets more generally this time?
First and foremost, yes, I think you guys have done a great job bringing in sort of the bigger macro picture and equities in general, because I think too many times people who are on CT are only focused on crypto. They're like, what's wrong with crypto? They don't understand the bigger economic backdrop that it's facing, the headwinds, everything else we've been talking about on the show the last couple of days. And I was scrolling as fast as I could to find a Chris Berniski tweet from a couple weeks back. So I just put it in the comments. And for those who, if this is your first rodeo and you don't really remember, say, the last cycle, and you guys obviously do, he had this great tweet back on February 24th. And he said, in the middle of 2021, BTC drew down 56%, ETH drew down 61%, Sol drew down 67%, many others 70 to 80% plus. You can come up with all the reasons for why this cycle is different, but the mid-bull reset we're going through isn't unprecedented. Those calling for full-blown bear are misguided. And I kind of agree with Chris here insofar as a lot of this is being done intentional, like I was saying yesterday, to try and get JPOW to bend the knee. You look at what David said on the show, not last Friday, I think the Friday before, just what we're seeing, for instance, in our company, family offices are interested. Everybody who's really paying attention to the tailwinds that are coming through legislation, through regulation, are very bullish long term. This is why I refuse to give up. Maybe I'm smoking opium, as some people might say, but I think at the end of the day, as being a long term minded person, this is all a great setup. This is why I'm happy to continue to DCA into BTC, and I feel like, if those of you who were here in 21 remembered, it was like the China FUD, and then like Tesla said they were selling their Bitcoin, and it was like a particular day in May, and it was one of the biggest red candles until just recently, which the red candle that BTC had was like $13,500, was the biggest daily red candle ever. But that day in May, I never forget, like looking at the screens and the charts, and everything was just absolutely nuking. And we came back that year to all the way up into February, to November, with JPOW basically told everybody, hey, we're going to start quantitative tightening, and everybody should just sold the top back in November of 21. But it really just came back, and I think people forget how strong this stuff bounces back, because at the end of the day, crypto is always going to be the fastest horse in the race. So when risk on does come, it's going to be a rocket ship.
Like it, man. Appreciate those extra thoughts. Speaking of Bitcoin, let's get into the second bit of news. Legendary Strategy, Michael Saylor's strategy, is not going to stop. They're going to raise another $21 billion to get access to Bitcoin, but this one's being done in a slightly different way. So would appreciate your explanation here on what we need to know. How is this different to the way he's raised before? Because I think there is an important distinction.
Exactly. Very big news coming out of Strategy, seeking to raise up to another $21 billion. This time, however, via their preferred stock, or to be more specific, the 8% Series A perpetual strike preferred stock. And there's a couple of differences to keep in mind and to understand of what is going on with that. So again, the idea is sell the stock, have this capital raise going on, and then use that money to buy Bitcoin. However, this time there is, because it's this preferred stock offering, there's an 8% dividend yield on that. That means if they were to go with the entire 21 billion preferred stock, there would also be a dividend obligation that comes into play, which is annual payments of then $1.68 billion that can either be financed, obviously, if BTC is going up, or if you then go with additional raises on the back of that to fund your dividend payments. But that is important to keep in mind. This is a preferred stock that comes with an 8% dividend that you have to pay. And that obviously also puts extra risk on Strategy as a company. If Bitcoin were to dump or were to just be stagnant, then you need to find other sources to pay for that. It's also very significant in terms of just the overall company. They're right now holding 500,000 Bitcoin, $42 billion roughly. And having this additional 21 billion is basically saying we are ready to buy up to another 50% of worth of BTC compared with the current stock that we are holding. Obviously, also an offering of that size is putting the stock under pressure, and that is something that we have seen playing out yesterday quite strongly. Strategy was down 17% on the day yesterday, went down from 270-ish, closed at 239, was super volatile in the pre-markets as well, currently at 250 in the pre-market. So did recover a bit from that, but still that is a massive move down. And also year to date, down 20%, down 28% even over the last month. So there is some concerns coming from the market selling off the stock after this announcement. It was also interesting to see unsurprisingly, that after that, BTC did go up for a bit. I think we briefly touched 83K before we continued in line, as you said, with the stock market dumping to also sell off BTC further. But just to sum it up, it's different because it's a preferred stock offering. It comes with this 8% dividend yield obligation. That means if they were to go for the full 21 bill, which they wouldn't do in one go, that would happen over time, that obligation would be up to those $1.7 billion. And the market did not like that news at all, sold off the stock very, very aggressively.
Interesting. Okay, so the key takeaway for me there to compare with before is that this is an equity raise, not a debt raise like they did in the past, which kind of, if I'm thinking about this right, there's then therefore no leverage in this raise, and therefore kind of no liquidation price. So for the people who are always concerned that Sailor might get liquidated, at least as for this part of the raise, is that fair? Is that the right way to think about it, Legendary? What do you think?
I mean, you do have this additional risk because of the dividend obligation. And I think the one thing to keep in mind is 21 billion is more than a quarter. It's 26% of Strategy's current total market capitalization. So it is a very, very massive movement. And I definitely would say there's still, because of the sheer size of that, because of the dividend obligation, risk attached to that. And just because you put that many new stocks potentially or shares on the market.
Interesting. And I guess, obviously they have a functioning business which earns money, but the revenue from that or the profit from that is not enough to finance that type of that amount of dividend, I guess, right? It's just too colossal.
Probably not. I don't have that numbers at hand right now, though.
Okay. Well, this is interesting. And I think, look, Sailor's getting to that point where I think a lot of people are kind of concerned about the size of his position, his, say his personal position, his MicroStrategy position. If you're going to understand Bitcoin or try to figure out Bitcoin moving forward, not understanding MicroStrategy and the colossal position that they're taking and getting on top of how they continue to add to their stack is probably unwise. Like, I think some of those questions which we asked are helpful, which we answered, but to the extent we can't answer all of them yet, it's probably decent to get a handle on those as we move forward, because this guy's not stopping. And I guess at some point in time, he is viewed as a potential existential, maybe not existential threat, but like a significant threat if he needed to part with the Bitcoin in any way at some point in time. So definitely worth diving in to the extent that you need some gaps filled, because kind of becoming very much attached to Bitcoin and its significance as he just continues to add faster than anyone else. Okay, that's that. Final headline for today. Raheem, this is an interesting one. We're just getting pretty decent news on the regulatory side over and over again. What do we need to know about this crypto debanking and what is expected for the Trump administration to ease or do away with?
So we've heard about like debanking in the crypto space from like a couple of like notable people as well, right? In the last year, I remember Brian Armstrong had put out a tweet. The CEO of Ripple has talked about that they've kind of struggled with that. So the Biden administration essentially had like some documents called the Operation Choke Point 2.0, which essentially led to a lot of riskier business not being able to have like bank accounts, which is where crypto falls under. The word Operation Choke Point is taken from during Obama's administration, where they had this term used for your payday loan takers and firearm services. They were considered as very risk pro-risk businesses, and they didn't want these companies to have bank accounts, and hence the keyword from Operation Choke Point 2.0. What the next executive order by the Trump administration is to basically reverse that, so that crypto companies that are operating in the US don't have to deal with their debanking, and they're also able to access like federal services through their banks. Again, super massively positive news on the regulatory side. We are obviously seeing a lot B2B positive news in regulation when it comes to crypto. We obviously had the first executive order signing, which was last weekend, which was mentioned where all the Bitcoin that was seized by the US government will be moved to the Federal Reserve as the Bitcoin strategic reserve. So we are back to back seeing a lot of positive news. And I mean, I like to believe that this all amounts to us building better and better products and protocols. So yeah, like on one end, we might be super bearish with the macroeconomics and the war news and the tariffs and everything. But if you look at and if you zoom out for a second and you think about the crypto summit that happened a week ago, and you look at things like this, it really brings hope into the crypto industry. And what US wants to do is become the crypto capital of the world.
I like it. Appreciate the summary, Rahim. It just feeds into kind of live feedback we're getting from Bread, for example, who has been in New York recently and really feeling the energy. I don't know if he'd been there at all recently, but you could genuinely feel his surprise of how almost cool it was to be in the hub, in a crypto hub where people are like moving around and kind of touching base, and just being able to network with people in a crypto hub, I think was something which he was experiencing. To be fair, one of the things I mentioned was that I think New York was kind of that anyway, even before the stuff became, or even before these moves to start to make things more easy to build in the States. I sense New York was already that, but as you say, it's probably very, very helpful for a number of companies to have this stuff being eased off, and probably will attract more people to go and build. Any reflections from you, Legendary, on this? Any further thoughts?
Yeah, it's also important from the banking infrastructure standpoint, right? Because if this is being signed, it also means that the Fed could then give master accounts to more crypto-friendly banks, which then again means those are the type of bank accounts that allow a financial institution to hold deposits directly with the Fed, to use the Federal Reserve's payment system, settle with them immediately, and all those things that crypto-friendly banks have struggled to do, or just didn't have those type of accounts and did have to go through an intermediary bank. And all those things would then basically be cleaned up. And if this happens, that would make banking for crypto-friendly banks easier and way cleaner from an infrastructure perspective, because they can interact with the Fed, to put it simply.
Yeah, something funny about crypto companies needing banks to be better for them, though, right?
Yeah.
Some kind of dark irony there, that in order to build successfully in crypto, please let us bank properly, despite the fact crypto is supposed to abstract away all the banks. But look, that's a commercial reality. Rahim, did you want to come in there? Any further thoughts?
There is a dichotomy in our space we constantly talk about, right? Like you just mentioned the crypto and banking thing. I was speaking to someone the other day about a friend of mine who's actually in fintech, and who is just who was
The two
I was
very
just like
easily
explaining to
confusable. The synonymous
and I was
protocols.
synonymous protocols. And I was explaining to him like the whole NFT events and the crypto events and Token 2049. And he was like, it's very fascinating to me, to someone who's not in crypto, that for someone like where the industry is so digital, that you guys pay so much attention to in real life events. And I was like, that is hilarious if you think about it. He's like, you guys build digital products, you guys are a digital currency, but you guys value physical and IRL interactions so much. And so I feel like there's always this dichotomy that we experience in our industry, whether it's on the banking side and this side, and then you have your DAOs and you have the foundations, which were kind of in like centralized and decentralized way. So I find that funny.
For sure. I think that's just life. That's just the commercial reality of business. Sure, it's wonderful that we can get loads more done digitally now and asynchronously, but can't take away some of that more human, personal, localized perspectives, I think. Oxy, I think your hand was raised just a second ago. Welcome to the stage, my friend. What are you thinking here? What's your take on kind of a move towards better regs on banking for crypto?
Yeah. So I was just kind of I put my hand down because I was thinking about this more a little bit. But so I guess my concern with that would be like where the proof of reserves ends up sitting, where banks are, if banks are handling crypto and all that kind of stuff, how does the proof of reserves at those banks get handled? Like as we know, no banks nowadays hold, you know, the cash that you actually have in your bank account. So like what are the regulations going to be like on that? Like do they have to hold one for one? And I guess I don't really have an answer to that, but just something I was thinking about, and how that's going to be handled, because obviously I mean we had a banking crisis not a couple of years ago out in California where, you know, the cash wasn't there and there's a bank run, and you know there's all those issues that kind of went on. I guess I'm just curious how they're going to handle it from the crypto side, and it was just something that kind of popped into my head.
Yeah, it's a reasonable question. My understanding is, well, I have no specific understanding of it, but I suspect it should operate on the same way that exchanges are supposed to operate, not the way FTX operated. My understanding is exchanges operate on the basis that all of those assets are there. And yes, you have to post proof of reserves. It's not the same, as far as I know, as banks, where you do know that not all of the assets there. You do know that your funds are part of kind of lending activities and other things. I don't know if that's yeah, I think that's the case, but it's a reasonable question. I think it's helpful to bring it up. We'll see how that goes. That's it, guys. That's it for the day. That's it for today's show. Thank you so much for joining us as always. Tough time in the markets at the moment. We hope that you are doing well, that you are surviving. We talked about the DGen Spartan article yesterday on the eGirl, is it eGirl Capital website? If you want to read it, or if you're struggling, you should read it. Helpful reminder that in essence, just survive. If you can survive in the next period of time, you'll be set up quite well to continue to prosper in crypto, because I think to a certain degree, it is a game of survival. So hope you're doing well. And we will catch you tomorrow as usual. Thanks again to Legendary and Rahim in the co-host seats. Thanks to Funky and Oxy for contributing as always. Take care. Have a wonderful day. We'll be back tomorrow. See you then. Bye-bye.